So I made a video not too long ago about how I lost out basically in tens of thousands of potential gain in the stock market this year because I tried to, time the market. Essentially, one mistake makes another mistake, and when you try to correct that mistake, you make another mistake, and then those mistakes get compounded, and ultimately you lose to the stock market. If you're watching this channel, you already know the best way to invest is to probably just invest regularly into a broad market index. Do it over 40 years, and you should beat 90% of everyone else who tries to time the market. But although we are well aware of this by now, it doesn't stop us from trying to time the market. So I was going to talk about why, even though we know that we shouldn't time the market, why a lot of people time the market and the psychology behind that, but also why, people buy at all-time highs, why people buy stocks when the valuation is so high, it's, almost impossible to justify it. But then I realized that, right now as we speak, the S&P 500 has, declined a little bit. So I kind of want to talk about that today. So as always, I'm using the Trading 212 platform. And if you would like a free fractional share worth up to £100 from Trading 212 to get you started with investing, all you have to do is to follow the link in the description box down below. Alternatively, if you've already signed up to Trading 212 in the past 10 days but haven't received your free fractional share, all you have to do is to press the 3 horizontal line menu over here, scroll all the way down until you see the section use promo code. And in this section, just enter my code JUBAIR and you should receive a free fractional share. So the stock market can be a really scary place, especially for beginners. Remember, before you begin, you have nothing invested, and then you have something invested, and at any point there could be a stock market crash. Intuitively, it almost doesn't make sense that the stock market is going to go up and up and up over the long term. So sometimes in our head, it makes sense to, sell when it's high and buy when it's low. But if you've ever tried to do that, it's a very difficult process. Now, as I film this, the S&P 500 is down by over 1% to the day, which is basically very different from what has been happening over the past year. Over the past year, the S&P 500, as I film, has been absolutely tearing it up over 17%, which is way more than an average year. Mind you, this also includes the 20% dip that we did see at the end of February, so it's absolutely outperforming any expectations. Right now, the valuations for all the companies basically that are dragging up the S&P 500 are through the roof. You can see companies like Amazon are having a great time, up by over 27%. Nvidia is up by nearly 50% on the year. Now, naturally, this gets a lot of people worried because, it feels like an AI bubble. If you look at every other point in time where there was a bubble, it felt almost exactly the same as now. I feel like there is a stark contrast between people who want to time the market and also people who buy at very high valuations. So as I film this right now, I'm trying to make a point, but Nvidia is declining quite a bit. As you can see, it is down by over 2% today, and it looks like it will be declining more. The point I'm making is that since 2019, the company is up by around 52,000%. Usually, this happens when a company becomes very hyped. Now, this hype could be due to a number of reasons. Sometimes it could be good hype because the company is expected to release something that will change the landscape, forever. That means there will be further investment into the company. The company should be productive and make more profits. Now, the other thing that can build hype in the stock market is more retail investors putting their money into a company because they feel like they'll get a return because it's already gone up by quite a bit. Now, Nvidia's return has been absolutely crazy. You can see over the past year up by nearly 50%. Basically, at any point, you can go in there and you can already think that Nvidia was overvalued, but the company just kept on going up and up. So when we look at the S&P 500, the top 4 companies alone contribute to most of the performance gains. You can see Nvidia at over 8.48%, Apple 6.87%, Microsoft over 6%, and Amazon over 4%. There are some other very large companies, for example, Alphabet, Meta, and stuff like that. But just by looking at this, we can see just how concentrated the S&P 500 is to the top 4 companies. If anything were to happen, if we were in an AI bubble, then surely the S&P 500 will also crash quite a bit. So that kind of goes back to the first question we asked. Why do people try to time the market? Now, I know it's not rational to do so. And one of the reasons is I think there's a small belief within the people that try to do that is that they can beat the market. For example, when we looked at the S&P 500, the top 4 companies have absolutely been smashing the S&P 500. So a lot of people think if you just invest into those companies on their own, then you can get most of the gains without having to, be invested into some of the losers. Even within the S&P 500, there are some great companies that have very small allocation to the total weighting. So if you're not invested into those, for example, PayPal, there's UPS and companies like that, then you're not really getting the most out of what the S&P 500 means. There's also the fact that when you're investing into something like the S&P 500, there is actually quite a bit of volatility. As I'm filming, I was in the negative and now I'm in the positive. So trying to time the market feels like we can get a competitive edge and make the most out of the volatility. We can pick companies that will give us a huge boost in our investments instead of being invested into ones that will only drag them down, even though we know if we stay invested over the long term, we're probably not going to be making some of the mistakes we're going to be making when trying to time the market. But unfortunately, most of us are still human. So make sure to check out some of my other videos and I'll see you in the next video.